Good morning, everyone. Welcome to the European crossover webinar. And the IFO Business Climate Index came in at 95. And current conditions at 97.9.
It's also right bang in line with expectations.
And bear with me, turn down the squawk. Okay, so the business climate came in at 95. IFO business climate prior was 94.6, so a little bit higher. And the current conditions came at 97.9. Prior was 97.8. The Euro actually just came off a little bit. So despite an improvement in numbers, it dipped a little bit here. It's relatively quiet trading this morning. Overlooking the data is going to come out. We obviously just had the IFO come out. And then, let's see, coming into the States, we will have Mexican economic activity. Now that comes in at 7 a.m. Eastern. And then we do have national activity and wholesale trade out of the U.S. and Dallas Fed Manufacturing Business Index at 10:30 a.m. Eastern. And that'll be it. Now, it's a relatively quiet start overall. I'm not seeing any major changes, although we are seeing the cable, a little bit of a surprise here, a little bit on the bid here at 28.80, 28.79.9. But look, the way it closed on Friday, it looked like we might see a continued further slip, but we're actually seeing that on the bid here at 28.80. So decent rise off of the close on Friday. Looking at dollar CAD, just a bit of an ease back here, not very much. Cash dollar index is also holding steady with a pretty decent close overall on Friday. Nothing dramatic, but at the same time, it was solid in the sense that we could have just closed just steady or a little bit weak, or we certainly rose in the dollar. Now, may be a little bit more to do with the euro, as the euro comprises 56.4%. So the euro continued to slip back, and we're coming into some very key support. We'll see how that plays out. Obviously, also dollar yen, a little bit. We actually came up to 8.90 or 8.89. A bit of a bid with equities opening up higher to start the week. Aussie dollar relatively quiet as usual. And take a look on the cross rates. Euro Kiwi continues to stay weaker. And let's see here. And the Kiwi yen actually pushing just a little bit higher. Boy, we've been stuck in a range in this market for a month, and looks like they're trying to push a little bit higher on the upside. Aussie yen, just a bit of a bid here, and Guppy pushing back higher also here. Obviously, like I said, we saw the cable a little bit higher, and the Guppy looked like it might be open to moving lower. And same thing, a little bit on the bid here, and Euro yen just dipping after a little bit of a push up, but we're kind of pairing back in a bit. Obviously, equities are a little bit stronger here. We came in with a bid over the weekend. Same thing, a little bit of a positive spin. Honestly, it's really irrelevant, whatever it is. I mean, I think China was, but the point is that no matter what, they're going to take something to spin it and trying to make it a little bit positive. The thought is they're a little bit more open. Oh, I think it was because China was going to crack down on some of their own companies in regards to intellectual rights infringement. So that gave a little bit of a bid, thinking that they're trying to, hopefully get something bit of a positive overture essentially towards potentially getting some kind of a deal worked, even a partial phase one deal that would eliminate the new rounds of tariffs that are supposed to come in place on December 15th. On Friday, they actually said those tariffs are in place, but that a gesture could delay those. Maybe that was that gesture. So there you go. Crude just kind of hanging around here, and gold just a bit weaker here. With that, we're going to the news, and just like the overall action, the news is very, very slight, to say the least. QE leads faint risk rally, and Brexit promise lifts sterling. The dollar and export-focused currencies found support on Monday as positive signs for the U.S. economy and upbeat headlines on U.S.-China trade talks boosted investor confidence. The pound climbed too on hopes for an imminent Brexit and the into years of political paralysis. The day's mood, tempered with weariness of the flow of trade news, was best illustrated by the New Zealand dollar. It rose 0.4 against the safe haven Japanese yen. Actually, we were looking at that. We were talking about how that would go even higher to 69.83 yen. Even if the numbers are small, there's a message in there that risk appetite has improved, said Westpac FX strategist Sean Callow. The dollar added 0.1 on the yen to 8.76. We saw here where we actually got with highs of around 8.89, and touched its highest level since November 14th against the euro at 110.12. It sat at 98.27 against a basket of currencies just below a 2-week high in the dollar index. Sterling rose to 28.47 after Prime Minister Boris Johnson, whose Conservative Party leads in opinion polls ahead of the December 12th election, promised to bring a deal to leave the European Union to Parliament before Christmas. The markets are holding to any sort of positivity we get at the moment, said Sean McLean, research strategist at Pepperstone. Keeping hopes for the breakthrough in trade talks alive was the weekend announcement of Chinese plans for improving protection of intellectual property rights, seen as a move to address the sticking point between the parties. U.S. National Security Advisor Robert O'Brien also said on Saturday a deal was possible by year's end. On the economic front, the greenback was buttressed by better than expected U.S. manufacturing data on Friday, seen as staving off the need for a rate cut. The main check on confidence has been rising tensions over Hong Kong. The city's been rocked by more than 5 months of anti-government protests, and Beijing has already reacted angrily to the passage of U.S. legislation backing protesters, which has cleared Congress but not been endorsed by President Trump. The price of the Hong Kong bill will be increased underlying U.S.-China tensions, says Vishnu Varathan, head of economics and strategy at Mizuho in Singapore, and that means greater uncertainty around the trade deal. Nevertheless, today's optimistic sentiment was enough to lift the trade-exposed Australian dollar higher on the greenback to 67.96. Later in the trading day, the focus is expected to shift to the German sector data and a speech from European Central Bank's chief economist Philip Lane at 1800 GMT. Well, we did get the German data, as I mentioned, and that came in to reiterate the IFO business new climate came in at 95 versus the prior months at 94.6. Current conditions came in at 97.9 versus 97.8. Once again, another slight uptick. And new expectations came in at 92.1 versus 91.5, also a little bit of an uptick. So with that, we'll go and move into the analysis. As I mentioned, it's relatively quiet overall. And I mean, we've seen it fairly quiet anyway in FX. So moving on to the euro. Says the euro culminated a disappointing week for bulls, finishing on its lows. The pair starts the week at a tipping point with the daily close support at 10.05. A close below will place bears in full control with a potential move to 8.96. Now that's if we get a daily close to below 10.05. And let's just go on it. There we go. Support is 991, followed by 957, and resistance is 1052. So let's go and pull up the last chart. So for now, we'll go and put our support, which is going to be 1091. Followed by 57. And the upside is going to be 1052. Now, the key thing is, like I said, if we get a daily close below 10.05, that puts the bears in full control and opens the door for potentially a move to 8.96. But support today would be 1090. I don't know what I'm saying, 1091. 991 followed by 957. So bear with me. And let's take a look here and let's move on to cable. So cable closed a week below supported to the support level of 28.48, opening the door for a challenge to 27.43, confluencing with 27.63, which is at 23% of 1961 to 3014. A further break will send the pair to volume level 2670. Resistance is 28.85, followed by 29.46. Well, as I mentioned before, is that we're actually seeing the cable a little bit on the bid. You would, well, obviously with Boris Johnson's comments over the weekend, and the thought that, wow, could this actually be ending? Now, the thought was on Friday, hey, we're getting ready to break down. Reuters even posted an article, potentially a good, decent breakdown, but obviously the comments over the weekend from Boris Johnson and the thought that maybe we can get this whole thing wrapped up, has certainly put it on the bid. We'll have to see how that works out for the rest of the day. But that being said, resistance is going to be 28.85. Well, what do you know? We've already made it up in here, but we'll stick to that. So it's going to be 28.85. And we were saying how it broke the level, and in which it did, 28.48. Considering that we're a bit on the bid, we're actually going to just go with this right there. Right there is perfect. It's going to be, well, actually, that was the day's lows right there, 28.33. We'll go right there, 28.21. 28.21. We'll put it pretty tight. Consumer started out with the bid. 28.21 essentially is going to be, in a sense, a tipping point. And what we're saying is if we get down there, we would expect to see some support in the sense that you'll see some people willing to step in. But if we get past that, really opens the door for us to work lower. I thought we were going to go and do that. And technically, we were set up for that on as of the close on Friday, but obviously the positive comments spin some things around. So let's see what we can go and do. The real test is going to be, can they even break a little bit higher here? we still have 28.85 here as resistance, but you know, if they were to push up, the real testing ground would be right there at 29.25. But I think right now it may have just a tough time to just trying to hold up in here. We'll see what they can do for the rest of the day. With that, we'll go and move into the Aussie dollar. You can see this thing has just been just, as I've referred to in other analysis, it's just been dead money. The Aussie opens a week set to challenge 67.47. Initial support is 67.72 with resistance at 68.31. The pair remains dead money. And that's exactly how I feel about this. It's just not going anywhere. You see what I'm saying? I mean, yes, FX has been quiet, but boy, there's probably a lot better areas of, you know, pairs to put you in than an Aussie versus the dollar. It's just nothing. It's not moving or anything. So once again, downside, support is going to be 67.72 with resistance at 68.31. And with that, we'll move into the Kiwi. Well, a little bit of a bid, still relatively weak. I mean, although it certainly looks a little bit better than what the Aussie does. The QE, like its sister Aussie, is dead money, attested by last week's 55 pip range. The upside resistance to break out is 67.40 with support at 63.46. So, like I said, there's just not a whole lot going on here. I mean, can you imagine that? Last week's range was 55 pips for an entire week. So 64.70 on the upside. $63.46 on the downside. And with that, let's go move into the dollar CAD. Dollar CAD hit last week's short-term target, which was 33.06, and remains bullish. Resistance will be 33.36, followed by the secondary target, which would be 33.82. Support is 32.36, followed by 32.05. So we did reach that target, which actually from the prior week, actually, you know, which was 33. Don't know why it's either 33.03 or 33.06, but as my dad used to say, mock snicks makes no difference. So basically 33.06, but we did get, obviously, we eventually pushed back there, but we've dipped back a bit here. So our resistance is going to be 33.06. I apologize. I mean 33.36, followed by our secondary target, which would be 33.82. So we're looking for 33.36. And support is going to be 32.36 for today. And with that, we'll go move into the peso. So the dollar peso closed the week above the key level of 1923.6, but the bulls don't stick around as the upside has been fleeting. Resistance to start the week will be 1946, followed by 1962. Bit of a stretch, like I said, we're looking out for the week overall, but it's a little bit of a stretch here, but this pair has been really up and down. Support is 1930, followed by 1923.6. So we're going to start out with resistance, which is going to be 1946. And support that we have is going to be 1930. Now, as I mentioned, is we did close above this key area here, 1923.6. We know how important that area has been as far as sparking the move. You can see the notes there, but we just simply have not been able to, garner any type of momentum. I mean, we were able to close above it, and then we quickly ran out of gas here. I mean, just as soon as it got above it, next day you're thinking, oh, they're really going to move higher. We finish at the day's lows. We make one last stab. We finish again at the day's lows, and we break below 1923.6. Well, just like when it looks like it's about, we're going to, slide further, we come right back up and we start to work up higher, and we make a new high. You can see here we take out the prior highs, and then we turn around and we slide right back down. So it's just been, like I said, the gains, the upside gains have been fleeting. They're not hanging around, so we're just kind of jumping around here. But that's about it. So bear with us for a moment. Let's go move into the dollar yen. Dollar yen is perplexing at this level. A recent slide in equities to start last week did not produce a move sub 108. The pair has resistance, The pair has resisted the upside. Levels to start the week are resistance at 109 even, followed by 927. We know about the key 927 pivot level. Was supported 821, followed by 778. So resistance, like I said, was going to be, our bias chart resistance will be at 109. And downside, we're looking at 821, which seems like a long ways off. But as I mentioned, we started out the week a bit on the bid here with the China news. Excuse me. We had seen a quick dip. I saw the announcement or heard the announcement on the Squawk. It was late Friday afternoon, and said the White House is saying that the tariffs, the increase in tariffs, are still set for December 15th. The market quickly dipped, and then they said, but we can see they can be pushed back with some type of positive sign coming out of China. Well, hence you get the intellectual rights. They're going to be cracking down on some of their own companies. So we got the bid here in the spruce. So there we go. Let's go and move into the cash dollar index. So the dollar index has reasserted itself with a solid close on Friday. Minor resistance is 98.41. That's pretty much kept this market in check all last week. Followed by 98.65. A daily close above 98.65 places the bulls in full control with an initial move to 99.13. Support is 97.89. So let's go with the support for 97.89, which is that key level. And we'll go back with this 98.41 on the cash dollar index. We've had that level a few times. But a daily close above 98.65 would go on and put the bulls in full control, opening a move to 99.13 for starters. But that would just be just for starters, because daily close above 98.65 really opens the door for a challenge to new highs. With that, we'll move into the cross rates. Well, we were just covering that just a little while ago when we saw the news story was referring, mentioning just this pair. So it says the Kiwi yen remains glued to a month-long range of 100 pips between 69 and 70. The pair will need to secure a daily close above or below these levels to generate a sustained move. So that's where we stand right now. I mean, there just hasn't been any change, although we're seeing a little bit on the upside. So resistance is going to be 70 even. And we need a daily close on either side to get this market moving. And on the downside, it's going to be 69. Let's go move into the euro yen. Okay, the euro yen closed the week on its lows going sub 120, opening a challenge to 1947. A daily close below would take the pair to 1871. Resistance is going to be 2031 followed by 2087. So let's go mark our resistance, which is 2031. And support's going to be 1947 on here. There. If we close below 1947, and I'm going right there with this bar here. If we get that close below 1947, it really opens the door, as I mentioned, for a further break. But it opens the door for the pair to go to 1871. But we'll see what we can do today. So it's going to be 1947. And with that, we'll move into the euro on. Bear with me one moment. Here we go. The euro odd is paired back ahead of major resistance level 63.41. The pair remains bullish, and the pullback should find buyers at 62.09, followed by 61.76. Resistance is going to be 62.89. So you can see here that key 63.41 area here, big level. You see that? So we have paired back, but we're saying, look, remember when we came down here and we actually had broken that trend line that we had said before, we actually recaptured this area. So the pair remains bullish, okay? So we're looking for, okay, it has kind of a paired back from this resistance level, but we do expect to go in and find buyers on this dip. So once again, we're looking for buyers to come in at 62.09. So there's our support. And resistance is going to be 62.89. And with that, we're going to move into the Euro Kiwi. So the Euro Kiwi finished the prior week on its lows, allowing for a challenge to 71.31 with a potential move to 69.91. Resistance is going to be 73.09, so we're still moving further lower here, okay? So you can see what we're looking for, 71.31. If we were to close below that, really opens the door for a move which will go on and take us down to 69.91. You think, well, that's not a whole lot, but we've been trapped in this very, very tight range, but there we go. So support today is going to be, and you can see this level, key level here. You can see the significance of here. All these touches here, 71.31. So I would expect to attract some interest there at 71.31. And resistance will be 73.09. Seems like a bit of a push at this point. We can probably lower that a bit here in light of this. Resistance being right here, that close. Let's go with 72.69. With that, let's go and move into the ASEAN. So the ASEAN is simply a drift. Support comes in at 73.42, confluencing with the trend line followed by 72.96. Resistance is 74.49, and you can see just I haven't seen anything like this, ever, where FX has just been just motionless. I'm not sure what that catalyst is going to be to knock us out of these ranges. And I'll address that later on with the dollar index. But we are simply adrift here. And so resistance is going to be 74.49. And support comes in at 73.42. You can see this level coming in right here, confluencing here with the trend line. But we are just simply, look at this. There's just no movement here. I mean, if you look at it for the past 3 days, we've been trading in what, like a 45 pip range? And even if you go further out to a week, that only stretches it out to what, maybe about 65 pips. Let's go and move into the guppy. Guppy closed the week on its lows after a failed upside move on Monday. Longs will be tested to 38.20 as bears have assumed control. Resistance will be 40.31. This is rather interesting because you can see that we've been trading in this, you can see this little triangle right here. And at a huge level, 140. 140 here. So right here, so it looked like, okay, we finally get a little bit of a breakout on Monday, and turns out to be what I call a dud, but you can see right here. So then we end up sliding for the rest of the week, and we close on the lows, and it looks like, okay, technically speaking, we've got the bears in control. You can see here, we took out all these lows here, but Boris Johnson's comments and the thought also that, hey, we're going to get this Brexit deal done has put a bit of a positive spin and jumped us back up here. The real test today, key test I was trying to say, is right there at 40.14. I am 40.34. 40.34. So let's see what we can do when we get there. If we get there, 40.34. Support. As we mentioned on here, 38.20, but I think that right now with those positive comments, let's give, before we get to the lows, it's going to be right here, coming right across here, all these little touches here. Let's go with 39.50, 39.50. And with that, we'll move into the sterling odd. Sterling has turned away from major resistance level 90.58 to finish the prior week on its lows. The pair's first test will be 88.44, followed by 87.60. Resistance will be 89.76. Well, right there at resistance, and once again, the market, just like the other sterling pairs, was set to take a little bit of a dip here. And you can see here, let's pull this back out here. This is a huge level on 90.58. It actually, to the point that if we were going to daily close above 90.58, it opens the door for a move. We covered that last week to 94.07. So really huge here. It looks like we were going to do it last week. We'd get above it. And, you know, we got this little gravestone doji at those resistance levels. And we ended up just closing the week. Look how we took out all these lows here. And it looked like we're open to moving lower. But the positive comments have spun things around. The resistance right now, once again, just like the guppy, it's going to be this key close right here. Actually, just a little bit higher. We'll put it right there, which is 90.13. And support is actually just like we did with the guppy. It's going to be right before those lows. It's actually going to be right there, which is going to be 89.06. So once again, because of those comments and the way that the market opened up, you know, the technically a little bit stronger here, we've tightened up those support levels, and we'll open up the challenge and maybe able to go a little bit higher here in sterling versus the AUD. Look at the other pairs, not other pairs, but other markets. As I said, we've got equity still holding up here. Got the SPOOs. It was actually a nice recovery in the SPOOs from last week's lows when we got actually as low as 30.91. And that's a lot of good demand down there. Obviously, it's interesting, funny to say in retrospect, but no, I'm saying is there was demand at those levels, and the market has actually held up and pushed higher. They're thinking we may get a Santa Claus rally. I mean, obviously the market is just doesn't want to let go because they've got the momentum going their way. And we did hold that 30.91. It's hard to fight this market. So it potentially, looking at it, we can, without too much trouble, make it up to 31.27. It's not that far away, but I'm just saying is we can make it up there, and we'll see what happens at that point. Gold, a bit surprised here, gold, although because equity's been stronger. But one of the things about gold was this was is when the SPOOs were under some pretty good trouble at when we were in the 30.90s on the way to 30.91. This is very disappointing. I thought we would have made up to about 14.82, and the fact that all we could do was hang around here. I mean, we got a little bit above the 38%, but all we could do was essentially push about $3 higher. And that was with the SPOOs really under some kind of trouble. So once the SPOOs regained themselves, it really opened the door for a move lower. We made this move back in here, coming up short of this 14.73, and allowed the market now to test lower as equities remain on the bid. Crude oil, don't know what to think about crude oil. I really don't know. This market has been a bit of a Jekyll and Hyde for a few weeks. Did look like it's going to break lower. They found some support. Interesting thing about crude, though, is when equity came under pressure, they didn't give up very much. And now here's equities on the high, and now they're not doing anything. So it's just an interesting. I don't know what this market, how it's really trading at this point. I haven't been doing anything. I've been doing stuff with indices, so it's actually turned out better than having done anything with it. But it's still a good market to trade, so I probably want to keep my eye on it. bonds are just kind of sitting here a little bit weaker as far as price in light of, to be expected in light of where equities are. Moving back to the main screen, I talked about the cash dollar index, said I was going to make a reference towards that. And we're actually seeing the euro now on its lows here for the day. One of the things we talked about, and as I mentioned, is, our resistance today is that same minor resistance area that we've had before, 98.41. But if we can get a move above a daily close above 98.65, you see here in the pink, puts bulls in full control with a move, an initial move to 99.13, but really opens the door for new highs. But with the dollar index, we're moving into potentially a little bit of a quiet week. I don't know. I think at this point, and I was thinking about that over the weekend, it's going to take a catalytic move in order for us to really establish a new direction. And what I mean by that is, how many times have we seen the dollar pull back, and many of us have written the epitaph for the dollar index, and it's come right back, and then it's come right back, it's coming right back. So if you see something go over and over and over again, at some point you got to say, you know what, I'm not going to fight it. I'm just saying I'm going to fight it. That's what I think is going to take a major catalyst move. What that's going to be, I don't know what. But the only way the dollar is going to break one way or another. Well, I don't want to say one or another because it's certainly bullish. The only way you're going to be able to see a sustained break is where on one specific day, whatever that catalyst is, we lose at least 85 ticks in the dollar. At least 85, if not 100. Then you can see a sustained move. And even then people will question it. But once again, like I said, you lose 40, 50, 65 ticks. It's not going to make any difference. It's not. It just keeps coming back. It's what Blake's, rubber ball, inflatable ball. You try and hold it can't even speak. Try and hold it beneath the water, and then you let go and it pops right back up above the water. So no one is going to think that the dollar index is going to sell off and fall unless you get some type of a catalyst that generates about 100 tick move in one day. Then you could potentially see some follow through depending on what that catalyst is. I don't know what it's going to take, what it's going to be, but that's what it's going to take to get the dollar to go lower. Any other way, no one's going to go in and fight it. I mean, actually, it looks like, I'm surprised it hasn't even bounced to move even higher at this point. But once again, if we get a daily close in the euro below 10.05, that's going to open the door for the euro potentially. Doesn't mean it's going to get there, but technically, close below 10.05 opens the door for a challenge down to 8.96. Anyway, that's all we have for today. Thanks for joining us here on the European Crossover webinar. We'll see you in the chat room.